Warriors, rise. The biggest secret banks don't want you to know. You're going to want to watch all the way till the end. I'm going to show you exactly what I'm doing. Warriors, my name is Coach JB. I am the top health, mindset, and crypto coach in the world. What you believe in your heart, you think in your mind will eventually become your words and become your reality. If you can see it in your mind, eventually you can hold it right here in your hands. What you repeatedly do gets ingrained in your subconscious mind. What gets ingrained in your subconscious mind becomes an unconscious activity. Big announcement, Warriors. On January 3rd, we are all launching the 120-day challenge together as one community. Your chance to join the most revolutionary crypto academy, health academy, and mindset academy in the world. We are launching together on January 3rd. Get your spot now by clicking the description down below. You'll see the Private Warrior Academy. It'll explain everything about the academy and what you get by joining the most dynamic community in the world. Let's jump right into it, Warriors. So we're first going to watch a little bit about cash. Okay, so I'm going to show you the first clip of Ray Dalio's video here. Now, Ray Dalio is one of my favorite economists. He is where I've gotten most of my studies from. He has studied deeply the economy for the last 5,000 years. And we're ready for a financial collapse, Warriors. It's nothing new under the sun. It's nothing to worry about. It's to move us into a new financial system from Web 2.0 to Web 3.0. From an old archaic banking system to a quantum financial system. From normal contracts on paper to contracts on blockchain. From moving intermediaries to moving to peer-to-peer. Think about it. Everything's moving to peer-to-peer, Warriors. So we're going to listen to this video right here from Ray Dalio, okay, talking again about cash is trash, how he's in cryptocurrency, a small percentage of his portfolio. But this is a very smart gentleman, okay? Then I'm going to show you the deflating US dollar, okay? I'm going to show you the value of your dollar. Then we're going to listen to Brian Brooks. And then I'm going to show you a small presentation that I created. Now, this is not financial advice. Do not take anything I'm saying as financial advice. I am not a financial advisor. I'm just documenting and showing you exactly what I'm doing based on the knowledge that I have in the quantum financial system.
Yes, you own some, even though you said you thought it was going to get killed by regulation. How much Bitcoin do you own? Do you have any other cryptocurrencies? And what do you think the outlook is for them now?
Well, I'm not going to give the precise amount of Bitcoin, but I do own some Ethereum as well. But the answer to your question is that I don't own a lot of it. I view it as an alternative money in an environment where the value of cash money is depreciating in real terms. And I think it's very impressive that for last 10, 11 years, that programming has still held up. It hasn't been hacked and so on. And it has an adoption rate. So I'm very big on diversification. And it's a relatively small part of the portfolio. I would like to say that cash, I've been quoted, cash is trash, cash, which most investors think is the safest investment, is, I think, the worst investment, and that it's important because it loses buying power. The one thing I would say to investors is don't judge anything in your returns or your assets in nominal terms, in terms of how many dollars you have. View it in terms of inflation-adjusted dollars. And so cash, like this year, you'll lose 4 or 5% to inflation. And so pay attention to those, because I believe that that'll be the worst investment.
Okay, so I want to stop right there. So cash is trash, right? He talks about he's diversified into cryptocurrencies, not a bunch of his portfolio, but I think he's big into gold and silver. Don't quote me on that. But let's walk through this. Let's take a look at the dollar, right? Now, remember, in 1971, we detached from the gold standard, right? Turning us into a printing machine. 1913, the Federal Reserve was created. Very important to understand. The Federal Reserve was created in 1913. The Federal Reserve is not even a government entity. It's connected. It was a entity that was connected outside of the government to protect the banks, okay? It's really important to understand. It's the richest people in the world. Some of the top bankers in the world created, read the book, Creature of Jekyll Island. That will help you out a little bit, okay? So 1913, a dollar was a dollar, okay? Adjusted for inflation, it takes about $26 to $27 to buy the same thing that a dollar paid for in 1913. Here's another better view of it backwards, okay? This is a buying power of a dollar over time from 1913 to 2021. Let me ask you a question, okay? If you look at this right here, did your productivity go up? Absolutely. Humans are way more productive than they were in 1913. Did your pay go up this much? Absolutely not. So your dollar keeps deflating, your productivity goes up, and you get paid less and less and less. And here's what's happened since January 2020. Bitcoin has gone up 294%. Okay, this was to January 2021, just to be clear. This gold has gone up 23%. The Dow Jones 6.8%. And oil has gone down 21%. Okay. Now we're going to watch a short clip from Brian Brooks. I love this House Committee meeting, financial services meeting. But we're going to watch a short clip, and then I'm going to show you the biggest secret that banks are keeping from you.
From Wisconsin, Mr. Dalio is now recognized for 5 minutes.
Thank you very much, Madam Chairwoman. As you may know, I serve as the ranking member on the Select Committee on the Economy, along with Chairman Himes. Both of us also members of this committee, and we're holding the first of 2 roundtables tomorrow on financial inclusion and access to banking for underserved communities, a topic we talk a lot about also in this committee, and an issue front of mind for many underserved communities around the United States. And so, Mr. Brooks, I'd love to get your thoughts on the relevance of today's topic for financial inclusion and how the growth in digital assets and decentralized finance can actually drive inclusion, and can underserved communities benefit from these developments?
I love that question, and thank you for giving me a chance to address it. A couple of things. So first of all, let's ask, why do we have so many underbanked people in the United States? And the answer is a combination of minimum balance fees, monthly account maintenance fees, and all kinds of other things that are a hallmark of the money center model that banking is built on, right? If you talk to Mr. Allaire about his product, he would tell you they don't have any minimum balance fees. They don't have any monthly maintenance fees. You can keep your assets in a tokenized bank deposit for free. So that's the first answer, is there are no $10 a month fees. There are no $25 wire charges. Those things don't exist that eat away at your life savings, A. And B, the next most important thing about crypto is here you have an early stage asset, which unlike the IPO boom, unlike venture capital, doesn't require that you know a guy or that you be well connected or that you be an accredited investor to participate. This is a chance for underrepresented communities to be in on the wealth creation stage of some new thing, as opposed to coming in at the end. So what I always say is that's the way you solve underrepresentation, is through wealth creation. This is an opportunity, and that is why there are more minority investors than white investors in crypto in the United States.
Boom, right there. Okay. So they know that we have the opportunity of a lifetime right now, that the normal everyday person can invest in cryptocurrency and be like an accredited investor, right? They don't want you in the casino wars. They don't want you owning the casino, excuse me. So let's talk about the biggest secrets that banks are keeping from you. Okay. Now, this is just my opinion based on my research, and I'm going to show you what I'm doing. Okay. Again, this is not financial advice. I would love to hear your comments down below if you think it's incorrect. I'm doing the best I can based on the research that I've done, and having 12 years experience in banking, going to CBA Executive Banking School, knowing how to scale banks, and then stepping outside of that and doing research on the other side and understanding how they're making their money for real. Okay. So how do banks actually make money? Interest income, capital markets income, and fee-based income. So interest income is credit card loans, home loans, and car loans. Okay. They have interest expenses, which offsets, right? It doesn't offset, excuse me, because they don't give you shit for your money, right? Which is the problem. So interest income is credit card loans, car loans, home loans. Those are things they lend to you, right? The money that's printed out of thin air. They use deposits, right? Fractional reserves. They can take your hard-earned money and lend it out to somebody else. Okay. Capital markets income. So just to break this down quickly, capital market income refer to venues where funds are exchanged between suppliers, capital, and those demand capital for use. So things like stock market, bond market. Okay. So that's capital market income. And then you have fee income, overdraft fees, checking service fees, non-sufficient fund fees, overdraft charges, late fees, and wire transfer. As we become more technology advanced in marketing, these margins have been squeezed pretty dramatically. The overdraft rules when I was in banking changed dramatically, and banks lost millions and millions and millions of dollars. Okay. Everybody's offering free checking now. A checking is what's called a loss leader. They do not make money off their checking accounts. Money comes into the checking account. They try to get your money in the bank account so that they could get your auto loan, your home loan, and get sticky products so you'll stay with the bank. Late fees, overdraft charges, and wire transfer fees. But we know all of this is being challenged. That's why Jamie Dimon said banks should be scared shitless of fintech, because in crypto, none of this. You won't have overdraft fees. You don't have checking service fees. You don't have non-sufficient fund fees. You don't have overdraft charges. You don't have late fees. And you can transfer money at the speed of light. Okay. All right. So where do banks invest their money? Key. They're not selling these products and services to you. They're not presenting this to you, the normal everyday person. Where do they take the money from? The fee income, the interest income, and capital markets income? They're putting into what's called BOLI, bank-owned life insurance. Okay. It's very attractive because banks can get huge returns than they could otherwise achieve in those markets, right? So remember, so there's money being put into their banks, fractional reserves. They're taking your money that was printed out of thin air that you worked hard for. They're lending it out to other people, taking the interest income, the fee income, and the capital markets income and putting it into bank-owned life insurance. So Folly.com, bank-owned life insurance is the little known ways that banks make money. Okay. The bank-owned life insurance is really, really important. If you go into BOLI is a bank-owned life insurance, right? But you can do products the same thing. There's life insurance policies out there that you can do the same type of thing. So I have a life insurance policy that I put money into. I just started mine just recently. Now remember, I was in the banking system, so I had to break free, reprogram my subconscious mind. Through my deep research, I started trying to set myself up like the bank, right? Now, do I have a fiat bank account, which is like a Wells Fargo, Chase, Bank of America? Yes, I do, because I have to pay my employees in fiat. I have to operate in the fiat system. But when I get paid, I put mine into crypto assets, and now I'm diversifying. So I have crypto, I have precious metals. I don't have a lot of precious metals, but I focus on silver for barterability if the US dollar collapses, right? I'm not fearful of that, but if it does, I now have my life insurance in place. It's in place. So I didn't want to start talking about it. I was starting to speak. I'm like, well, let me make sure I have it in place. It's in place now. I'm funding it. It's rolling. We're ready to go. My life insurance, I can borrow against my own life insurance as a bank. If I want, I can buy more assets. I'm not recommending you do that. You could buy more assets and you can pay with the profits of the asset yourself back. You're paying yourself back. That's exactly what the bank-owned life insurance is. They can borrow from their own policy. They can put it into assets, right? And they also put insurance policies on the big level executives' orders. There's so much happening behind the scenes that you're not privy to. That's why Jamie Dimon says banks should be scared shitless of fintech, right? They're putting policies on these executives, high-level executives, and they're borrowing against that orders, okay? But life insurance, you can do the exact same thing on certain life insurance products, okay? DeFi, decentralized finance. That's where I can go and put my Ethereum. I can stake my Ethereum like in a place called like Nexo, right? Nexo is an example. I can put $100,000 of Ethereum and immediately within minutes, I can have a DeFi loan for $50,000. The LTV, loan to value ratio, 50%, depending on the cryptocurrency and its volatility. They give you an LTV, okay? Loan to value ratio for Ethereum is 50%. Immediately, I have liquid $50,000 that I can put into my bank account tax-free. There's no capital gains. And if I go buy, say, I'm just giving you an example. Say you go buy 2 Turo cars, you rent those Turo cars, you can take that income and pay yourself back. You're paying yourself back. Okay. You still have your assets as long as you pay that back, and you don't even have to pay it back. It's interest only loan. It's wild. Okay. Then you have, now I'm going to come back to that in just a second because there's something really important you need to listen to. Staking. Just like the bank, you can put your cryptocurrency in staking protocols, and the bank gives you 0.00025%. Staking 3%, 4%, some up to 20%. It's wild, warriors. Okay. So let's go back to DeFi. Very important. Learn from my mistakes. I did a DeFi loan to practice around May, and the market collapsed. So you never want to do a DeFi loan during a bull market. I would highly recommend you wait till things stabilize, till the prices stabilize, and I would do it in a bear market because you're getting 50% loan to value. Well, what if you have $100,000 staked and you borrow 50,000 and it collapses down to 50,000? They will liquidate your crypto if you don't put more in there. So very important. Do not do a DeFi loan, and not a large DeFi loan in the bull market. Just my opinion. Okay. I just want to make sure you know that. So life insurance. So I'm my own bank now, become my own bank. So I got my life insurance policy that I can borrow against. Nobody can touch that. The principal is guaranteed. Nobody can, if they come after me, you can't touch my life insurance policy. Okay. My DeFi loan, that's in between me and my account with my crypto place, right? There's no banker judging me. There's no credit check. I get my money. I can do whatever I want with it. And then staking, this is why they're coming after regulation. This is why they're coming after exchanges wars. So the thing I will caution you is I don't know what regulation is going to do to the life insurance. Take that out of it. Life insurance has nothing to do with this. That's already operating. That's already here in the system. You can do that now. DeFi, staking, all that stuff. I don't know what regulation is going to do to that. So just be cautious, just be careful, just be diligent. Okay. So here's what the cash flow looks like. Okay. Here's what the money flow. Okay. So business, I have 7 companies right now. 2 are generating profit. The other startups right now. Okay. I'm going to be closing my first LBO here probably in the next 30 days. Crypto gains, asset profits. So that would be a little bit the same. These would be assets here, right? So the asset profits from biz profits, crypto gains go into my insurance, and I'm putting my Ethereum into DeFi. Okay. I can borrow against that. This is an example. I can borrow against that and buy more assets. I could buy more businesses. I could buy more crypto with the assets profits. I can pay my insurance and DeFi loan back, and you can keep this cycle going. And you're in the middle of an asset generation machine. This is not financial advice. Okay. Now this is important. Banks want in this is my dyslexia. So banks want in to beat you to crypto. banks want in to beat you to crypto. That's what it's supposed to say. They want to build the casino in crypto so they can move the fiat casino clients over. So as they distract you this way, they're getting set up in cryptocurrency. Federally regulators, credit unions can partner with cryptocurrency providers. That was just recently. I announced that to you guys. Federally chartered banks and thrifts may custody your cryptocurrency wars. So it's an amazing race for the banks to get set up with the cryptocurrencies so they can hold your FedNow wallet. They have to have a pass-through account for the CBDC. That's already enacted. Okay. Then you're going to custody your cryptocurrency. So eventually, I guarantee you're going to be able to walk into a Wells Fargo or Chase, and you're going to be able to do an Ethereum DeFi loan. Eventually, you're going to be able to worse. You're going to be able to custody your cryptocurrency at a trusted, right? Trusted, little quotes there, third party, because people trust their banks and trust their government more than they trust themselves. It's just what it is, worse. I'm not saying it's good or bad. It's just how the system's going to work. So hopefully this helps you make an informed decision. Don't take any of this as financial advice. I love you guys. I appreciate you. As we always say, Warriors, get your shit together. Click the description down below to join our private Warrior Academy, free Discord, or free Facebook group.
Well, look at the time. I'll try to keep this brief. After 28 years of peacock logos on much of what I own, it is my choice now to jump without a net into the great unknown, as I do for the first time in my 62 years. My biggest worry is for my country. The truth is, I'm not a liberal or a conservative. I'm an institutionalist. I believe in this place, and in my love of country, I yield to no one. But the darkness on the edge of town has spread to the main roads and highways and neighborhoods. It's now at the local bar and the bowling alley, at the school board and the grocery store. And it must be acknowledged and answered for. Grown men and women who swore an oath to our Constitution, elected by their constituents, possessing the kinds of college degrees I could only dream of, have decided to join the mob and become something they are not, while hoping we somehow forget who they were. They've decided to burn it all down with us inside. That should scare you to no end as much as it scares an aging volunteer fireman.